Welcome to the Weekly Market Wrap-Up. I'm Hannah Bernard. It was a wild week for the global financial sector as nearly all major equities markets experienced volatility heading into the final stretch of January. Thursday's domestic price action regained some of the losses, but performance continued to be mixed. Does this mark the end of the bull market, or will the Fed come in to seal the gap? U.S. markets on Thursday saw all top 3 indices post strong gains following Wednesday's dramatic sell-off. The S&P 500 moved 6 points shy of regaining the 1800 mark, and the Dow added 109 points in the bag. However, the Nasdaq was the clear leader this week, moving up nearly 2% to close at 4,123 points. It was the strongest single-day performance for the tech-centered index since October of last year. But investors do need to be cautious about the quality of this upswing, since year-to-date, the markets are still net negative. Canadian markets also fared better this week. The Toronto Stock Exchange closed up on Thursday a whopping 92 points to close at 13,735. The TSX Venture Exchange, however, did take a hit, losing nearly 6 points to close at 952. The biggest fundamental driver for volatility in the U.S. equities market was the Federal Reserve's surprising decision to continue powering down its bond buying program by $10 billion for the second straight month. This comes even despite the fact that jobs growth slowed last month and weakness in the emerging markets continue to apply pressure on stocks. Investors that are looking for the Fed to step in may be disappointed, as top economists predict that several months of subpar payroll growth would need to be witnessed before the Fed would consider reversing the taper. Let's turn now to currencies. The US dollar index was notably choppy this week as several emerging market currencies were under stress due to global growth concerns and stubbornly weak Chinese economic data. The index hit a high of 80.83 midweek after the Fed announced that it would continue tapering down its QE program. Thursday's market action added to the dollar momentum, with the index closing above 81. The dollar-yen pair also experienced a volatile week as it charged back towards the 104 level, but was immediately rebuffed by a hawkish Ben Bernanke, which sent the pair tumbling down to 102. With global belt tightening, it will be exceptionally difficult for Japanese markets to gain traction after being the top equities market for 2013. The euro-dollar was not immune to the drama breaking out in the global economy, with the pair stumbling to 135 after hitting multi-year highs only a month ago. Chronic unemployment in the Eurozone, as well as a weaker emerging market, are amongst the biggest challenges facing the region. Now to winners and losers and our picks for the week. The winner for this week is Canadian Pacific Railway, ticker symbol CP. Canadian Pacific was one of the few companies that bucked the downpour on Wednesday, with shares popping up 4% to settle in at $147.61. Quarterly net income of $82 million beat Wall Street expectations, while management was also able to bring down operating ratios to an industry-leading 65.9%. The positive earnings result was followed by a massive inflows of money, with volume increasing fivefold over its 3-month trailing average. The loser for this week is Triumph Group, ticker symbol TGI. Shares dropped almost 12% evaluation after the aircraft supplier's quarterly earnings fell well short of analysts' expectations. With a comprehensive miss on both revenue and net income, which came as a result of both production rate cuts on both commercial and military airplanes, Triumph Group was forced to lower 2014 guidance by 9.5%. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. On Monday, Yum! Brands comes out with an EPS estimate of 80 cents. The conglomerate has companies such as Pepsi, KFC, and Pizza Hut under its umbrella, and last month, Pizza Hut announced a new concept stores that started selling pizza by the slice. On Tuesday, the popular retail brand Michael Kors Holdings comes out with an EPS estimate of 87 cents. And on Wednesday, another retailer is out, as Elizabeth Arden has an EPS estimate of $1.47. The cosmetics giant announced last week that it priced its previously announced private offering of $100 million aggregate principal amount of senior notes due 2021. Now checking in on Canadian stocks to watch next week. Monday has Suncor Energy out with an EPS estimate of 82 cents, in contrast with 65 cents in the prior year quarter. On Tuesday, WestJet Airlines Ltd has an EPS estimate of 52 cents, compared with 46 cents in the prior year quarter on revenues of $929 million. And lastly, on Thursday, Saputo Inc. has an EPS estimate of 75 cents, in comparison to 65 cents in the prior year quarter that saw revenues of $2.3 billion. Last week, the cheese giant boosted its interest in highly sought-after Australian cheesemaker Warrnambool to about 75%. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street, and BayStreet.ca, I'm Hannah Bernard.